Dalton's market is cooling off, but not the way you'd expect. Is it still a good time to buy? Are sellers losing control? Today, we will be dissecting the real estate market for Dalton, Georgia using Altos Research Market Action Index. And we will also look at an overview for the national real estate market in the USA using various sources. If you're curious what these numbers mean for you, whether you're buying, selling, or just planning ahead, let's break it down together. My calendar is available. I have a few spots open. Just click the link below and pick a time that works for you. I am Josselin Iraheta with eXp Realty, serving Dalton, Georgia and surrounding areas. Let's dive into what the data is actually telling us. We end this week for the month of July with a median list price for homes in Dalton, Georgia of $367,450. But more importantly, the market action index, which tells us whether it's a seller's market or buyer's market, dropped from 37 last month when I did the report to 31. That's a sign of cooling momentum. June's median list price, it was 510,000. So it's a big difference. The market action index MAI matters because it measures how fast homes are selling versus how many are available. A score of 30 is considered balanced. We're just above that, so technically it's still a seller's market, but barely. Sellers still have a bit of an edge, but that edge is shrinking fast. Other signs of cooling are inventory, which is up to 12 homes this month. And last month, it was 11. Price reductions are at 33%. Last month, which was June, it was 27%, which means more homes have gone through price reduction in July, which oftentimes is a strategy to attract buyers and get the home sold. A rise in inventory plus declining MAI, Market Action Index, usually means buyers' demand is weakening. Average days on market is 108 days. Last month, it was 115 days. Median days on market is 49. Last month, it was 56. Days on market, DOM, is a velocity metric. The drop in both average and median days on market shows that homes are moving more quickly compared to last month. Even though the market action index dropped from 37 to 31, this suggests that demand is slightly cooler overall. But the homes that are priced well are still selling faster. And that's a sign that serious buyers are still out there and they're acting quickly when a good listing hits the market. And remember, the new listing price is $467,450. Them coming in lower than the current market average is an early signal that prices could fall soon. That's one of the first signs that tells us sellers are adjusting to softer demand. The median rent is it's $1,810, more affordable than last month. With rent still sitting around $1,800, some buyers might find homeownership more stable long term, especially if prices dip further. What this means for buyers is more choices and potential for price drops in coming months. If you've been waiting for more negotiating room, dear buyer, this could be your moment, especially if the market action index keeps trending down. What this means for you sellers: fewer bidding wars, need to price competitively from the start. Price reductions are becoming more common, so keep that in mind. And it's still a seller's market, but barely. If you want top dollar for your home, price it right from the start. Overpricing could mean sitting for weeks or even months. Want to know how your home fits into this shifting market? Or thinking of buying but unsure if now it's a good time? Let's take a look at your price point and how long homes are sitting in that range. Book a Calendly call with me in the description below. It will be my honor to serve you. Now, let's zoom out and look at the bigger picture. What's happening in the U.S. housing market overall? Home buying season has largely struggled due to persistently high mortgage rates and ongoing economic uncertainty. Consumer concerns about financial stability and job security have dampened buyer confidence. Mortgage rates fluctuated between mainly within the 6% throughout the second quarter of 2025. When it comes to inventory, it has steadily improved, surpassing 1 million active listings in both May and June, a milestone not seen since December 2019. This indicates a shift towards a more buyer-friendly market, which, if you watch my last month report, nationally, overall, the market is favoring buyers. Despite improved inventory, buyers largely remain on the sidelines, suggesting that housing costs, rather than inventory availability, are the primary barrier to home sales. Midwest region. Popular due to housing affordability, low cost of living, and climate resiliency. Average listing price in June was around $344,000, roughly $100,000 below the national median. Some of the states include Illinois, Indiana, Iowa, Kansas, Michigan, Minnesota, among others. The Northeast region, less affordable, but remains popular due to high demand outpacing supply, meaning more buyers than houses for sale. High earning buyers are creating cross-market demand in areas close to economic hubs. Some of the states include Massachusetts, New Hampshire, New Jersey, New York, Pennsylvania, and Rhode Island, among others. Texas and Florida continue to dominate the bottom of the ranking due to growing inventory, thinning out buyer demand, longer time on market, high climate risk, and rising homeowners insurance premium and property taxes. This has eroded their previous affordability advantage, meaning Texas and Florida are becoming less attractive to buyers due to higher costs for climate risk and slower market movement, pushing them to the bottom of the national housing market rankings. That doesn't mean houses won't sell in those states. They will sell regardless, but nationally, they're ranking at the bottom. Zillow predicts gradual market shift, with new listings outpacing sales, and inventory recovery is expected to continue toward pre-pandemic norms. This increased supply, coupled with sustained high interest rates, is expected to lead to a 2% decline in home values by year end. This indicates a cooling trend, moving the market towards greater affordability and more balanced environment for buyers and sellers. Existing home sales expect to reach 4.160 million by the end of 2025, a 2.5 improvement over last year. As of July 2025, mortgage rates remain essentially flat according to Freddie Mac Primary Mortgage Market Survey. For the 30-year fixed rate, averaged 6.74% in July 2025. The 15-year fixed rate averaged 5.87% in July 2025. While the Federal Reserve has paused rate cuts again in June 2025, maintaining the federal funds rate between 4.25% and 4.5%, many housing market analysts foresee mortgage rates only gradually easing by the end of 2025, if at all. The Fed's cautious stance is due to concerns about inflation and the impact of tariffs. Fannie Mae forecasts mortgage rates to end the year 2025 at 6.4% and 2026 at 6%. JP Morgan expects mortgage rates to remain above 6.5% in 2025. Realtor.com predicts 30-year mortgage rates will remain higher than originally projected, averaging at 6.7% across 2025 and ending the year in that range. So basically, for the remainder of this year, they're all predict the mortgage rates to stay within the 6%. Some experts suggest mortgage rates could fall if inflation cools slightly and job growth persists over the summer, potentially spurring a rate cut at the Fed's September meeting. If you are a buyer in a financial position to afford payments, there is no need to wait. Remember, waiting for interest rates to drop could cost you more because that creates bidding wars and you might end up paying more. Despite a slow housing market, home prices hit an all-time high in June 2025. The median price for an existing home sold last month was $435,300, surpassing the previous record set in June 2024, according to National Association of Realtor. NAR. However, overall sales numbers were at a 9-month low with a 2.7% decrease in June from the previous month. The current market favors those with significant financial resources. Rising wages and a strong stock market enable some buyers to make all-cash purchases or leveraging existing housing equity. Homes priced above $1 million saw a 14% sales spike last month compared to a year earlier. All cash buyer constituted 29% of all transactions. For first time and middle income buyers, the market remains challenging. The median price is 48% higher than 5 years ago. That is crazy. And elevated mortgage rates currently averaging 6.74% further deter potential buyers. Many homeowners with low interest rates mortgage are unwilling to sell, contributing to limited inventory despite an increase in homes for sales compared to a year ago. The median sales price for a new single-family house sold last month was $401,800, nearly $40,000 less than the median existing single-family home. This is partially due to builders constructing smaller homes and offering price incentives. So this number is the median sales price you would pay for a brand new home. It's actually cheaper right now to buy a brand new home than a used one, which is backwards from normal. Builders are doing whatever they can to attract buyers in this tough market. New home sales were at a seasonally adjusted annual rate of 627,000. That is a 0.6% increase from May of this year, but a 6.6% decrease from June of 2024. This signifies a notable year-over-year decline in buying activity. This number is talking about the quantity sold. The one on the previous photo was price for those new homes. The price being lower doesn't mean more are selling. In fact, fewer new homes are selling compared to last year. We are down to 6.6%, even though builders made them cheaper and smaller to try to attract buyers. There were 511,000 new houses for sale, representing a 1.2% increase from May 2025 and an 8.5% increase from June of last year. This rise suggests homes are staying on the market longer. The supply of homes relative to the sales rate reached 9.8 months, up from 9.7 from May of 2025 and an 8.4 months in June 2024. A higher month supply indicates a slower market with more supply than demand, giving buyers more options to choose from. So the key takeaways are affordability is key. Despite increasing inventory, high home prices and mortgage rates are keeping many potential buyers on the sidelines. The market is currently favoring those with significant equity or cash. The market is not uniform across the country. Affordable regions like the Midwest are seeing increased interest, while previously hot markets in the South, like Texas and Florida, are experiencing a cooling due to climate risk and rising costs. The steady increase in active listings is a positive sign for buyers, offering more choices and potentially leading to more negotiating power. However, this growth is not yet translating into a significant surge in sales due to affordability constraints. In conclusion, the July 2025 U.S. housing market is in a period of adjustment. While some indicators point to a more balanced market, high cost continues to be a barrier for many. Potential buyers should remain informed about the local market conditions, mortgage rates trends, and consider all available options, including new construction, to navigate this evolving landscape. If you found value in this video, please do me a favor and share it with someone who is considering buying or selling. Subscribe to the channel so you don't miss my next video. And if you would like to buy or sell in the future, or maybe relocate into the area, which is Northwest Georgia, and would want clarity, book a Calendly call with me to see how I can be your guide in this process. Thank you so much for watching. This is Josselin with eXp Realty.